Well, in case you missed it this morning, we did have an overnight export sale announced by USDA. Let's take a look at what it actually was. And the commodity involved was soybeans this time, and it was sold to Mexico. Now, part of it, most of it, about, we'll call it 53,500 tons, was for delivery during the current marketing year. The rest of it was for the 2022 and 2023 marketing year, a year out from now. So the total was 101,000 tons. Not a real big batch in the bigger scheme of things, but everything helps. And it was soybeans. And again, no mention of corn. That, in the rumor mill here over the past week or so, we've had several rumors of large sales of corn in the works. And so far, we've only seen one fairly small batch, I think, in the last week. Well, let's go to the board and see what the markets are doing right now. Corn continues to struggle. And right now, it looks like of all the grains, this is some of the weakest activity here. The nearby corn on the March, now at 638.5, that's down 17 1/4, now down 16 3/4. 639 is now the last trade. We're about 3 cents from our low of the day. We're off of our overnight high by about 16 cents. And December is down 9.5 cents at 588 3/4. So a lot of pressure in this corn market here. Soybeans had steep losses early on, and now they have come back quite a bit. March beans still down, but they're only down 10 1/4 at 1559 3/4. They have bounced off of their earlier low this morning by a full 17 cents, and so that could be encouraging to market bulls. On the November contract, the new crop beans, they're down a dime at 1432.5. Wheat market, they are actually outpacing the corn to the downside, at least in Chicago. March is down 22 cents at 777 1/4. And likewise in Kansas City, March is down 24 cents at 804.5. Yikes. In spring wheat today, we have the March contract down 15 1/4 at 950 3/4. Cotton market, currently it has a split decision going on. March only 1 point lower, December 28 points higher. Brian Hoops joins us now. He's with Midwest Market Solutions. Well, it's kind of hard to get a good handle on what the markets want to do here. Lots of chopping around, but one thing is evident. Wheat and corn really taking it on the chin today. How come?
Yeah, you're absolutely right, Marlon. There's a lot of premium being built into ideas that Russia would invade the Ukraine, probably more than I expected and a lot of the trade had expected. We're seeing it taken out of the corn market today. And because we're at the middle part of the month of February, first notice day is coming up on the 28th of the month. So a lot of the trade, especially your big, long fund traders, will look to get out and spread this market in the weeks to come. And they'll start doing it right about this time of the month. So I think you're going to see some of that spread unwinding, getting out of the March and buying into either May or July or even all the way out into December for this new marketing year. So you're going to see some long liquidation against the March contract over the next couple of weeks, and that's going to put a little bit more pressure against it. So this will be true probably for wheat and for corn, soybeans as well. The downside definitely be led by the front months with some buying in some of the deferred contracts. But yeah, we're seeing a kind of a real risk-off type day in the wheat and in the corn. Soybeans starting to find some footing here and try and rally. As the weather forecast for South America still looking pretty dire. Not much in the way of changes as far as adding rain or anything. Still warmer and drier than expected. Crop conditions have seemingly stabilized since the first year, but they're only 36% good to excellent in the country of Brazil. So it's a crop that's really struggling at this point.
And for those of you wondering, that West Texas Intermediate crude still getting pounded on, down $4.23 right now. All right, Brian, we'll come back and talk about livestock after a quick break. Our guest, Brian Hoops. Don't go anywhere. We'll be right back. Let's go back to Brian Hoops and see if he has any information on what's going on in the cash cattle market activity today. Brian, any word yet?
Well, we've heard some bids at 140 in the Southern Plains, but those have been passed so far by the trade. That'd be reflective of steady money compared to a week ago, and the fact that the feedlots are holding out for a little bit more money than that, and we're seeing futures try and rally late yesterday and again today, tells us that we're probably going to see at that $1, maybe $2 higher type of cash trade. So no surprise to see the feedlots holding out for a little bit additional money here. We're looking at very weak corn prices, and that's helping to stimulate some buying interest in the feeder cattle as well.
Well, let's take a look at our current prices here, Brian. We'll go to the big board and start with live cattle. They started out with a big surge this morning. Then they eased back quite a bit, and right now we're kind of in the middle. We have the April contract trading at 146.90, and that would be up 55 cents on the day. June leading the charge. We're up 67 there. So the intermediate months are actually leading the way. On the feeder cattle trade, here again, we started out, we were over $2 higher on the nearby March early in the day. Then they sold off. We were barely $1 higher. Now we're up $1.92 again at 168.80. So a big surge taking place for the second time today. April now up $1.42, and now we're at 172.92. So we're within about 60 cents of our high of the day as we speak. And if you go to the lean hog market, look at these gains led by the nearby contract. April now up $1.82. We're at 104.15 on the day. We have the May contract $1.62 higher. We're now at 108.12. And June is up $1.72. Brian, we had noted where the wholesale beef trade had turned mixed here on the afternoon update from USDA yesterday. The pork trade kind of backed off a little bit on the carcass values, but they have had quite a run too recently. What do you see happening here on the wholesale markets now heading into next week?
Yeah, the boxes are trying to stabilize in the beef and the pork a little bit here. I think you're going to see, prices continue to improve a little bit as we go forward. At the wholesale level, I think you're going to see, prices there, consumer demand still remaining fairly strong. And packers are trying to take advantage of that with paying with the higher money this week. Show list numbers down this week, about 1,500 head. That should be supportive to the cash markets this week as well for both pork and the beef markets.
On the pork side, do you think they're going to retest those highs from like a week ago?
I certainly expect that they will, Marlon. We're seeing huge gains in the cash markets. Lean hog index is reflective of that, and that's pushing the market higher. So I would expect to go back and test and probably exceed those contract highs at some point here in the next several weeks.
Interesting stuff. Well, Brian, thanks for helping us out here this morning. Always good to talk to you. Brian Hoops of Midwest Market Solutions. Tammy, back to you.